whatever the amount invested by equity shareholders will be paid at the end. Whatever the calculation you will get as per cost of equity, the same answer you should consider for retained earning also. Have they given anything like floatation discount? No. So what is the answer? Your answer will be 70 only. So 1 lakh into 20% is the dividend. So your dividend portion will be 20,000. Hello everyone, this is your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So we are in the session 7 of your topic called Financial Management Cost of Capital. So under Cost of Capital, we are almost in the end sessions. Now, under Cost of Capital, we have discussed about Cost of Debentures. Under Cost of Debenture, we have topics like your redeemable as well as irredeemable. Once we're done with your Cost of Debenture, what is the next one? Preference shares. Under preference shares, we discussed about your redeemable as well as irredeemable preference shares. Once we're done with your preference shares, finally, we have a last topic called equity shares. Now, under equity, we don't get redeemable as well as irredeemable. Why? So first I'll go for the agenda, later we'll go with the concept. In the concept, I'll explain you why in equity we don't have redeemable. So under agenda, we have concept as well as problems on cost of equity. In this, as I told you, so in equity shares, we don't consider this as redeemable. Why? Why? Because there are three kinds of capital. One will be equity, preference and debentures. Normally, equity shareholders are called as owners of the company. So, owners of the company. Equity shareholders are called as owners of the company. Now, whatever amount invested by equity shareholders will be paid at the end or else at the time of winding up of company. Once again, I'll repeat. So, whatever the amount invested by equity shareholders will be paid at the end in the sense at the time of winding up of company. Now, there is a major thing. Why? Because they are the owners. So they can take back their money only when they are closing their company. That's why they are called as owners. Now, whatever profit left out, it will be given to whom? Equity shareholders only. Once everybody has taken whatever left out, all belongs to whom? Equity shareholders. Now, under equity shareholders, we don't have redeemable. It is always irredeemable. Irredeemable means what? Non-payable. Now, in this, debenture holders, we have interest, we have tax. Preference shareholders, we have dividend. Similarly, in equity shareholders, we have dividend. Along with dividend, we have one more concept called we have growth also. Now, for equity shareholders, there is a concept called growth. So, whatever percentage given in the question, like 5% growth, your final answer plus 5%, your answer will be your whatever addition you got. Like, you will do normal calculation, cost of equity is 10%. Growth rate, they have given 5%. Plus 5, the total answer will be 15%. Like this, you are supposed to calculate. So, these are the information you are supposed to remember at the time of problems on equity shares. Now, according to this, compared to your preference shares and debenture, whatever formulas we have in equity shares, whatever calculations we have in equity shares, compared to your preference and debenture, it is easier. Why? Because the formula is very small. Only the formula is like your dividend divided by net proceeds. This much only your formula. Again, I'll repeat. What will be your formula? Dividend divided by net proceeds is your formula for the calculation of equity shares. So format, it is nothing but the formula to calculate your cost of equity. As I told you, there are two kinds of problems you can expect in equity shares. One problem will be normal problem without growth rate, and the second problem will be called as problem with growth rate. Once again, I'll repeat, you may get two kinds of problems. First problem is without growth rate, and second type of problem comes with growth rate. Now, as per this, no growth rate. As I told you, dividend divided by net proceeds. In the question paper, net proceeds are not given. Once again, I'll repeat. In the question paper, net proceeds are not given. You should go for market price. Remember, net proceeds are not given means we should go for market price. Similarly, dividend divided by net proceeds. In the question paper, if they have mentioned any growth rate, we are supposed to add that growth rate. That is compulsory. Clear? Yes. This is all about your equity shares, cost of equity. Now, we have a small note here. What is that? Cost of equity is another important component. Why? Because in this structure where cost of retained earning is equal. Why? Because if you calculate the cost of equity, the same answer you have to take it for retained earning also. In the first session already I explained you what is the meaning of retained earning. Under retained earning, as I told you, whatever the calculation you will get as per cost of equity, the same answer you should consider for retained earning also. Why? What is a retained earning? I'll explain you already, but again I'll explain you. Retained earning, it is nothing but first there are year 1, year 2, year 3. Last 3 years, 2020, 2019 and 2018. What was your profit like? It was 25,000 profit, it was 30,000 profit and it was 40,000 profit. Now, out of profit, will you spend completely? No. Out of 25, 5,000 you kept as savings. Next, out of 30, again 10,000 you kept it as savings. Now, out of 40,000, again around 15,000 you kept it as a savings. Now, total all 3 years savings comes around 20,000. It comes around 30,000 is your savings. Now, these savings. Now, what is the heading? Retained earning. These are what? Profit. Profit also called as what? Earning. These are called as earnings. Now, retained means what? Whatever earnings you have, if you have saved that, that is called retained earning. Whatever profits you have, if you save that profit, retain that profit, we call it as retained earning. Now, so for this, is there any cost for this? You have to pay any interest for this? You have to pay any dividend for this? No. Why? Because it is your own savings. If I have 10,000, I'll invest in the business. Is there any chances of paying interest? No. Why? Because it is your own money. There is no cost for retained earning. Then, without cost showing to retained earning, how do you solve your problem? The answer is, you cannot find out cost for retained earning. Whatever answer you got, like cost of equity, the same percentage should be shown for retained earning. Hope you understood. So whatever cost we got for equity shareholder, so the same answer we should consider for your retained earning. Now, as per this, cost of equity is another important component of capital. So, where cost of retained earning is equal, whatever we have showed for the cost of equity, same thing we'll show it for retained earning also. Now, I'll go for the first problem, easiest one, will not take much time, we'll solve it in 5 minutes of each problem. Now, X company is a equity shares of rupees 10 each. The dividends declared during the current year, it is around 2.5. What is the dividend? 2.5. What is the net proceeds? It is 10. What is the growth? It is not given, 0. So we got all the information. Go to your answer now. Cost of equity divided by net proceeds. Cost of equity 2.5 divided by 10. 2.5 can be multiplied with 100 to find out the percentage. The answer is 25%. Hope you understood. Now, I'll go for the next problem, problem number 14. Now, company gives the following information. The dividends per share of the current year is 12.5. What is the dividend? 12.5. Now, find out the cost of equity. You have question 1, question 2, question 3. You are supposed to solve 3 problems in this. Now, I'll find out what is the net proceeds. Net proceeds for first problem, second problem and third problem. So we know dividend it is 12.5 for all 3. But while doing problem 1, 12.5 is the dividend. Problem 2, 12.5 dividend. Problem 3, 12.5 dividend. So what will be your net proceeds? Now, how to calculate your net proceeds? Simple. Your book value is 50 per share. First one, 50 with 10% flotation minus 10%, it will be 45. 10% means it will be 5 rupees. Clear? Yes. Second one, book value is 50. Write down it is 50. With 5% discount, we have to minus 5%. Minus 5% is equal to, this will be what? 2.5. 47.5 will be second answer. First as well as second. Now, third one. The market price is 70. Find out the cost of equity. The market price is 70. Find out the cost of equity. Now, so how to find this? The market price we got, it is 70. Now, find out the cost of equity. What is the cost of equity? Now, have they given anything like flotation discount? No. So what is the answer? Your answer will be 70 only. Here we have not taken net proceeds. We have taken market price. So MP. Market price. So hope you are clear with these things. So what is the NP or MP in this? This will be 45. This will be 47.5. This will be 70. I'll go for the answer. Your answer is very simple. Cost of equity is equal to dividend divided by NP for the first one, for the second one and for the third one. Now, so dividend is same. It is 12.5 divided by 12.5 divided by 12.5 divided by. Now, what is the answer? Your NP 45, 47.5 and 70. 45, 47.5 and the last one is 70. Calculate this. So, I'll do everything. I'll multiply with 100 so that I'll get answer in percentage. I'll get answer in percentage. Now, 12.5 divided by 45 into 100. Your answer is 27.77. 27.77%. Second one. 12.5 into 100 divided by 47.5. Your answer is 26.3. 26.3%. Your second answer. And the third one, 12.5 divided by 70 into 100. Your answer is 17.85. 17.85 is your third answer. Answer number 1, answer number 2, answer number 3. Any doubt? No doubt. Easiest one. You may get 5 marks problem like this, or else your complete 15 marks problem including this kind of problems also. Now, next one, problem number 15. Now, the current market price of equity share is 90. The dividend per share is 12.5 and the growth rate is 7.5. See, in this problem, they have mentioned growth rate clearly. Now, remember, your growth rate, we should take it separately. Remember, this growth rate, you should consider separately. Now, as per this, what happens? Cost of equity is equal to your dividend divided by net proceeds. So, your dividend is how much? I'll show you. Dividend, it shows 12.5 and your value NP is 90 and the growth rate is 7%. These are the informations available in the question. Now, I'll show you this 12.5. Now, don't consider this 7. 7 we will consider later. 7 we will consider later. Now, as per this, your dividend is almost 12.5. What is the market price or net proceeds? 90. Divide, you will get 7%. So I'll show you separately so that it will be easy for you. So formula is what? Dividend divided by net proceeds plus growth. Now, as per this, what is the dividend you have? 12.5 divided by 90 plus growth. If you calculate with final answer multiply with 100, how much you will get? If you calculate this, you will get around 13.9% plus what is the growth? 7%. Add 20.9%. This is a calculation. If you have any confusion in this calculation, you can go for this. It is easy to remember, or else easy to understand. Now, so what is the answer? Calculate normal problem. Final answer should be added with your growth. Don't include growth anywhere here. Growth is always separate. Your final answer should be added with your growth. Hope you understood. Now, the next part will be very simple. A company issues 1000 equity shares of rupees 100 each at a premium of 10%. Now, so what happens? 1000 equity shares of rupees 100. It will be almost 1, 2, 3, 4, 5. 1 lakh. At a premium of 10% means how much it is? Now, plus 10%. 10% means it will be 10,000. Your answer is 1,10,000. What is this? This 1,10,000 we call it as, yes, this 1,10,000 we call it as NP. What is your NP here? 1,10,000 is your NP. How did I calculate it? Simple. Number of shares into value of share. It will be 1 lakh. At a premium of 10%, at 10%, you will get 1,10,000. Clear? Yes. Now, this one we calculated. Now, what will be the dividend? Dividend always calculated on what? Face value. What is the face value? 1000 into 100. It is 1 lakh. So 1 lakh into 20% is the dividend. So your dividend portion will be 20,000. What is the dividend? 20,000. I'll go for the answer now. So, for 5 years, expect to maintain the same in the future also. Compute the cost of equity capital. Will it make any difference if the market price is 160? So, we'll do it 160 later. First, we'll do normal problem. Now, so the first one, as per this, your dividend is 20,000. Net proceeds 1,10,000. Now, as per this, what is the formula? Cost of equity, dividend divided by net proceeds. Is there anywhere growth rate in the problem? No, there is nowhere mentioned the growth rate. Now, as per this, cost of equity is equal to dividend 20,000 divided by 1,10,000 multiplied with 100. What is your cost of equity? We'll check. Your cost of equity will be 20,000 divided by 1,10,000 into 100, it will be 18.18%. 18.18%. Any doubt in this? No. Your final answer, we call it as 18.18%. Now, we'll go for the second one. What is the second part? They have mentioned that what will be your answer if it is 160 per share. Earlier it was 100 rupees per share. Now it will be 160. Slight changes will be there. I'll go for that. Second one, your dividend will be 20,000 as it is, and NP will be how much? 1,000 shares into 160. It will be 1,60,000. Now, what will be your formula? Dividend divided by NP. This will be how, what is this? Cost of equity. Dividend will be 20,000 divided by 1,60,000. So multiplied with 100 so that I want answer in percentage. Now calculate this. 20,000 into 100 divided by 1,60,000. I got 12.5%. 12.5%. Remember, irrespective of your net proceeds, that dividend will not change. Dividend will remain as it is. Why? Because dividend is always calculated on face value. Always remember this. Dividend is calculated on face value always. Now, so we're done with all these calculations. So I'll go back to all these slides so that you can take screenshots. So this is your formula. So this is your problem number 1. Problem number 2 for the day. So problem number 2 answer. Problem number 3 with solution. Problem number 4 with solution. Yes, this is a continuation of problem number 4. Yes, this is the last part of your problem number 4. Yes, this is all about your today's session. Hope you understood what is cost of equity. Remember, under cost of equity, we will not consider any interest part. Directly we'll go for simple formula like dividend divided by net proceeds. From the next session, we wind up with all this cost of equity, cost of debenture, cost of preferences. Directly we'll go for your weighted average cost of capital, WACC. I explained you what is WACC in the first session itself. We'll do the complete 15 marks problem from next session. Never neglect these kind of problems. Why? Because for 5 or 10 marks, again you will get problems on these things. Thank you.